You know, creating your own private banking system is really all about finding opportunities. I mean, think about it. What do banks do? They're always looking for opportunities, and you are the opportunity because you need money. There are only two types of people. There are people with money and people that need money. Banks love both. They love deposits from people with money, and they love lending money to people that need money. So today, you're going to become the bank. You're going to learn how to find those opportunities, capitalize on them, and become your own banking system. You know, the infinite banking concepts is not some glorified savings program where you just take out a whole life and all is good. You just put your money in the whole life and everything's going to be okay. That is absolutely not what the infinite banking concept is. The infinite banking concept is actually the process. I'm going to say that again. The process of you taking back the banking functions in your life. So how do you take back the banking functions? Well, first let's think about what banking functions are you giving up. Number one, you're going out there working for money, taking the money and giving it over to the bank. You're literally giving your money to the bank. It's called a deposit. The bank is taking your money and making it go to work for them by lending it out to other folks, including you. Your credit cards, your car loans, your mortgages, all of those are loans the bank is giving to you from the deposits we all make. I mean, look at it. We make deposits in the bank turns around and lends that money back out at a higher interest rate than what they pay you. If the bank paid you 4, they charge 7 in this example for a mortgage. But it gets even better. They've conditioned us so well so that every time we get money, like when the seller gets the money from the sale of their house, they take it and put it back in the bank, giving the bank the ability to move the money at a higher velocity, faster and faster at higher interest rates, making a bigger spread. I said that really fast, but hopefully you heard one thing. The bank pays me a lower interest rate than they charge me on the loan. Let me repeat that. The bank pays you a lower interest rate. Some of you are getting nothing on your savings and checking. They're paying you a lower interest rate than what they're charging you. The magic is in the middle. Spread. The spread the bank makes from what they pay you to what they charge you. And the bank is even smarter because they find opportunities that can be collateralized, like mortgages. They take a first lien position on the mortgage, or car loans where they take a lien position on the car. So if you don't pay them, they foreclose on the house, they go and send a tow truck out for your car. They're really smart. So if they're so smart, why can't you do the exact same thing? Well, the answer is you can. You're doing all these things. You're saving money now. Let's just start with a bank account, 401ks, IRAs, brokerage accounts. You're saving money. But what also you're doing is you're borrowing money. So what if we just changed where your savings goes first? We put your money into a specially designed, let me preface, specially designed and engineered whole life insurance policy from a mutually owned insurance company. Now, why would we do that? Well, I'm going to use the board for a quick second. Let me ask you a question. Why would you put money in a bank? I'll wait. The answer is because that's what you were told to do. Because I guarantee you the answer is not because of the lucrative interest rate the bank is paying you on the money you deposit there. You are putting money in the bank because they pay you interest, but most importantly, because that's what you've been taught to do. So what if you were taught to do something different? What if you no longer put the money in their bank? What if you put the money in your bank? So instead of their bank, it's your bank. What's the difference? None. But what if your bank paid a higher interest rate than their bank did? So if their bank paid you 4, what if your bank paid you 6? Would your bank be better than the bank that paid 4? Maybe. But then what if your bank also paid you 6 tax-free? Is that better than the traditional bank? Maybe. And what if your bank allowed you to put that money in, paid you a higher interest rate, tax-free, but then allowed you to use the money and take a loan from your bank and lend it out on something that you want, like a house? So you take the money and you buy the house. You saved it, Now you take it out. No different than how a traditional bank works. But when you take the money out, let's say your bank has a lower interest rate than what their bank does. So what if your bank allowed you to use the money that you deposited, which it should, right? But it allowed you to use that money at a lower interest rate than what you earn. That would be the opposite of what their bank does, because remember, their bank paid you 4 and charged you 7. What if your bank paid you around 6 and your bank charged you 5.2? How do you like that? Wouldn't that be way better than their bank? Because now you made a spread, but you made a spread the right way. So if the insurance company, which is the bank that we're talking about, because you just changed where you were depositing money and you put it into a specially designed whole life. Now, the 6% might vary. It might be 6, it might be 4, it could be whatever. It depends on the insurance company you use. But one of the insurance companies that we use pays 6.4% dividend crediting rate, which is how I came up with the 6. I just lowered it down a little bit. And where did I come up with the 5.2%? That same insurance company charges 5.2% to take a loan from your cash value. So literally, we are becoming the bank. But hold on. When you used their bank and took out a mortgage on a house, what did you also have to do? Did you not have to make a mortgage payment back to the bank? You sure did. You had a mortgage payment that every single month you would pay back into their bank. So what if you just made that same mortgage payment, but you paid it back to your bank? Just think about that. You changed where your money went first. You put it into a specially designed whole life. But we're going to consider that our private banking system. And then when you need to buy something, you take a loan from your bank because it's a lower interest rate and because, well, it's your bank. And why would you give business to anyone else's bank when you had a bank, right? Logically makes sense. But then when you take the money from your bank, you would pay the money back into your bank at the same rate you would have paid their bank. There's a very material difference. If you paid your bank back a mortgage payment, all the money would end up in your bank, wouldn't it? And you would have access to that money when the check cleared, would you not? When you make a mortgage payment to their bank, does that money end up in your bank account? Nope. It ends up in their bank's bank account, not yours. Are you picking up what I'm putting down? All this is, folks, is simply you doing what a bank does every single day. So now that you're kind of seeing that, I used a mortgage, but what else could you use it for? Well, since you have debts with other people's banks, or some of you do, why not take back those debts? And instead of paying them a credit card payment, a car payment, a line of credit payment, why not pay your bank those? So all you'd have to do is save up enough money in your bank so that you could lend money from your bank to buy the car, and then make car payments back to your bank. So you could lend the money to yourself to remodel your home, and then you pay the money back into your bank. And you could use the money to pay off your credit cards, and then you pay the credit card payments back to your bank. You see, now what you've done is you've taken back the banking functions in your life by just thinking as if you're the bank and changing one thing, which is where your savings went first, and then apply a process called the infinite banking concept, this process of making your money go to work for you instead of making your money go to work for their bank. Doesn't that sound better? Do you want your money working for someone else, or do you want it working for you? Because at the end of the day, that's what we're talking about. So all the infinite banking concept does is enables you to become the bank, enables you to take back control of your money, enables you to force savings into an account you control that pays you a higher interest rate, dividends, in a tax-free environment where you can earn uninterrupted compounding interest. But hold on a second. Stop. Let's get back to the fundamentals. And those are click the subscribe button. Fundamental is you got to get around this campfire so you know what's going on. And right at the top of the screen is a little bell. What I'd like you to do is smash the bell. And once you smash the bell, you'll be notified of all the events that we do every single week that are totally free for you to use. So get around this campfire and learn how to take back control of your money by being the bank. So like I said in the beginning, Building your own private banking system is all about finding opportunities, but the opportunities are right under your nose. The mortgage you pay someone else's bank, opportunity. The car payments you pay someone else's bank, opportunity. The credit card payments you pay someone else's bank, opportunity. And the opportunities are endless. That's why it's called the infinite banking concepts. Now, before all of this sinks in, I got an idea for you. Right in the description of this video, there is a link to a video. The video outlines all the fundamentals of what I just explained in a short period of time. It's a 90-minute video, so watch that video. Hey, some of you are all techie. Pull out your phone, go to the camera mode, and scan that QR code in the description. It'll pop up the little video that you watch. Watch that video and you will learn how you can become your own bank, how to get all the money back for every car you ever buy, drive, and own, and a very deep dive in how to pay off all the debts, but most importantly, how you can build wealth through your own debts and expenses. If that doesn't excite you, well then maybe you should check this video out right here. How to get down with your stepmother. I mean, how to get down with Private Money Club, of course. You know, the banking, yeah, anyway. I have no idea why they told me to say that, but you know, it's like when you read the prompter, you just say exactly what the prompter says. Remember that? Thanks for joining me for this episode of Becoming Your Own Bank. Now go out there, take back control of your money, and we'll see you on the next time. And don't do any of that funny business.